Assalamualaikum and good day. My name is Nurhanie Azwa Binti Awaludin, matrix number 273930, and I'm going to present the individual presentation of BKAR3053 Financial Accounting and Reporting 5. The article that I'm going to review is the need for Islamic accounting standards, the Malaysian Islamic financial institution experience. In the first instance, the study's purpose is to explore the perspective of financial statement preparers on the procedures of reporting Islamic financial institutions in financial statement (IFI). Forward to the aim of the study, where it states that the member of the company in any industry is looking forward for company's operation to be more Sharia compliant because it will be more transparent in terms of the reporting and disclose any information that is important to users in order for them to make decisions, because usually or sometimes conventional institution is not too open regarding their problems or risks that they had, as this may stunt investors from investing to them. Then, to determine whether or not a separate set of Islamic accounting standards for IFI is required, because there is a significant difference in the transactions of IFI between Islamic accounting and conventional accounting. By that, Accounting and Auditing Organization of Islamic Financial Institution (AUFI) as a regulatory body is enforced to help IFI to equate transaction between Islamic accounting and conventional accounting, and after that, to get an understanding of the market requirement for reporting the practice of IFI, despite the fact that the Malaysian Accounting Standard Board (MASB) has made an attempt to develop special Islamic accounting standard for IFI. It is necessary to understand the market requirement for reporting the practice of Islamic financial institution (IFI). This is because the position of the issue of reporting change year after year, creating difficulties in using Islamic accounting. In this way, it is possible to demonstrate the practice of IFI is strongly reminiscent of the conventional institution or banking methods, which will undoubtedly limit the ability of Islamic accounting to be used in day-to-day transaction in the future. Next, we go to the summary of finding part, where the issue is developed. The first issue is regarding the products and application of international financial reporting standard in Islamic finance reporting. Here it says the IFI can use IFRS in prepaid reporting. This occurs when there is a functional and transactional resemblance between IFI products and conventional institutions, as the functioning of IFI products that are established is based on conventional banking, which will be more Sharia compliant, where the products are then reintroduced that will lead to be more into Islamic accounting and compliance. However, there will be a little variation between them, since IFI employs a distinct product contract and idea, because in Islamic accounting, they utilize products that involve equity-based financing or debt-based financing, but conventional banking is just the creation of money or interest, which leads to excess profit for the institution. Plus, IFI are regulated in accordance with actual bank practice. Therefore, the products are identical in function but differ in contract, which is related to the cost structure of the Islamic products in terms of the transaction breakdown involved. For example, if it is related to investment, there will be no investment deposit needed for Islamic banking, but a yes for conventional banking. In the other side, Islamic accounting uses the concept of akad, which it makes different with conventional. Refer to this, we can know that the products that we buy is in an Islamic environment or not, by pronouncing an akad between the two sides will indicate that a contract of purchase has taken place in an Islamic manner if you want to compare with the conventional way that did not need akad. Secondly, finding summary on accounting and auditing organization for Islamic financial institution accounting standards. The issue may arise when there will be a possibility of difficulties in adopting AUFI if two sets of accounting standard is produced in consolidating the financial statement of IFI, which lead to difficulties in comparing the concept, contract, and the qualifications. in the other side. The difference in mazhab also increase the difficulty to follow only one guidelines because the Sharia Advisory Council SAC in Malaysia is quite liberal since we follow the Maqasid Sharia principle, which basically means achieving social and economic justice while also promoting community well-being. This is due to if follow the principle from Middle Eastern countries, they will be more strict on standard plus the Alfi that use Maliki mazhab also different from Malaysia that use Shafi'i mazhab. So there may be a contradiction if we use it. As a result of this, there is a discrepancy in Sharia interpretations, resulting in the so-called Arab and Malaysian version, owing to Malaysia's too liberal Islamic perception of Islamic Sharia principle. At the same time, the Malaysian version become almost the same with conventional and MASB think that the Islamic accounting should not have separate standard, as there is no noticeable difference in operation between IFI and also conventional banking products. Third finding summary is on the future of accounting and auditing organization for Islamic financial institutions accounting standards. Here, the IFI accelerated development around the world lead to prevention of developing countries from creating and also improving their own accounting system, resulting in the domination of Anglo-American accounting practices around the world. As a result, most authorities, including the MASB in Malaysia, believe that IFRS are Sharia compliant and hence can be utilized to prepare IFI financial statements, but also worry some parties whether the IFRS covers all the transactions because IFI products are being equalized with conventional institutions' products. Besides that, the IASB's coordination work has garnered ongoing support from numerous government and countries throughout the world. Even though in future Malaysia going to concentrate on IASB's IFRS, but because the IASB is a more powerful authority that dictates worldwide accounting standards, IFI are not free to develop ALFI accounting standards. If Malaysia wants to use the MASB as a stepping stone to develop IFI, because the role of the MSB is only to implement international standard into the Malaysian accounting system. Following to every finding, there will be implications that may occur. First, the preliminary sacred aims of IFI evolve in a similar way to the capitalist practice of the conventional banking system, which is a similar evolution, and the reason is that the products of IFI and conventional institutions perform similarly, and the only difference is in the terms of contract, where conventional will be more on gaining profit, while Islamic accounting not. And the IFRS are able to report IFI products in a manner similar to conventional banking products. However, in order to govern the IFI environment, it is not necessary to have separate Islamic accounting standard, IAS, but by having more disclosure and transparency on reporting by institutions will give more confidence to users to adopt Islamic accounting as the products of Sharia compliant and approved by a legal body. Also, in this article do contain some limitations when conducting the study where the evidence are only observed based on Malaysian market, not including outside country. So the data gain is not too broad and do not delve into the opinion of other countries regarding the use of Islamic accounting in their transaction because, as we know, Islamic accounting has more advantages than the advantages because Islamic accounting does not only rely on profit also, but also helps users in making better decisions. Secondly, examines the reporting issues of IFI without further investigating on how Islamic are the products of IFI as to whether the products are being approved, monitored, and also etc. As a conclusion, there is no clear consensus on the necessity of specific accounting standards for IFI because most activities and procedures still follow the conventional ways and also to provide recommendation or choices for IFI within the scope of the IFRS because even if being used globally, same as IFRS. then there will be a chance for our fee to be used same as ISB in terms of transaction, reporting, and disclosure without any problems and doubts in the future. That's all from me. Thank you.